Hey everybody, November 3rd, 2015. This is Rich with Thrive and Survive Rebooted. I'm going to try to keep this kind of video maybe more on this channel to see how it works out. In any case, we've been covering the markets off and on here for quite a while. And to refresh people, there has been a change in the market from bullish to bearish. And let me just go through a little bit of the recent history that we have talked about on this channel so that you can get an idea of what's going on. Now, first of all, nothing in any of these videos is meant for any kind of trading advice at all. If you want to trade, contact your own financial advisor and go by that advice. This is not advice to trade. This is to just keep everybody up to date on what I believe is going on. And that's all it is, my belief. It is not trading advice. For those of you who are going to write inevitably that the market is manipulated and how can we tell anything by manipulated charts, I have a question back first. Why do you watch the video? But other than that, I have made it my contention that markets have always been manipulated since trading began, long before electronics. So manipulation has been there for quite a while. It has taken on many different forms, and what you are seeing on the charts is manipulation. It is when all of a sudden we have a market reverse. That is when manipulation reverses and goes the other way. It follows patterns. Those patterns are trapped or captured, I should say better, in things called Elliott waves. I'm showing you here what I believe to be, after, trust me, looking at many different services, that this is the ultimate best that you can find here. If you're going to trade anything at all, manipulation or not, I would highly recommend the Elliott Wave Market Service. You could try it for a week, and I'll leave a link below in the description so that you can try it. Try it. You will like it. And so anyway, I'm going to go over some of these things right here, let you know what is going on. And we started talking actually a year ago, more than a year ago now, and I did a little bit of cycle study, and I determined that somewhere between June, I think I came out with June 27th to July 27th, I was expecting the markets to turn. Now, the markets are not the economy. We know the economy has well lagged behind the markets. However, when the markets begin to show reality, that is when people will panic. When people panic, that's when things start to get dicey, and we need to talk about some other things. And what this is going to hopefully keep people updated to where we are in the panic cycle that is developing. Also, these type of things tend to bring war. The bankers and manipulators themselves don't want to be taken to task for what they do. So they usually create a huge diversion, such as war or something like that, so that we're not looking at them when things fall apart. Things are about ready to fall apart. And let's look at the track record that we've been talking about since last year. Now, we did top. Most markets, except for the Nasdaq, tended to top this past June. And we've been heading down for the most part ever since. We've had a bounce back, which we have been fully expecting. In fact, I did a video saying that that was going to be the rally that everybody was going to probably buy into, the one that they would think everything is okay. And as we usually do with market tops, there is one market that is diverging, which is the Nasdaq, and maybe I'll cover that here, which has reached new highs just now. This is typical of market tops. You have one market that will outperform the other, or I should say go in the opposite direction of the others for a short period of time. So what you're looking at right now is the Dow Industrials on a daily chart, and this is how the chart is marked up on Elliott Wave Market Service. I won't go into great detail. If you don't know Elliott Waves and you are interested in trading, I would highly suggest looking into it. And we're going to look at a weekly chart here. Actually, let me go to the weekly now, because I think that'll be better to start with. Let me run you through this pretty quickly here. This low down here, 6,600 roughly in the Dow Jones. What we're in right now is we had a run up to a high which occurred in 2007 or 2008. I don't remember now, it doesn't matter. But ever since then, we know about the financial crisis of 2008, in which the markets tanked. There was a lot of problems with the economy and with overheated housing markets and all kind of things, and nobody realized it until the markets fell apart. Then all of a sudden everybody recognized it, and when people recognized it, that's when companies and things like that started laying off people. The same thing will happen again, but in this case I think we're going to have a big rout of deflation coming with it. We'll see. In any case, in 2009, in February of 2009, we came down. We're in a several year long correction off of that high that occurred in 2008, and it will form a wave 4. The odd waves go, in this case we're in a bull market in the stock market overall, and the wave 3 is the strongest, most powerful. That's the one that ended in 2008. We started a wave 4. It will come down as an A, then up to a B, and then down to a C. C is the most powerful. It is a third wave of the corrective modes. So A, everybody thought A was a pretty bad correction, down from the market tops down to that 6,600 low. This could possibly be, I don't know, 4,000 on the Dow, maybe even lower than that. We'll see. In any case, we have topped in the B in almost every market except for the Nasdaq, and it will roll over here shortly. And let me now switch back to the daily so we can see where we are. Here's where we are right now. We've had our first moves down off of the high, and that will come as a 1, 2, 3, 4, 5 as a intermediate wave 1. Then we'll have a 2, and then the big one, which will happen probably mid to late next year, will be 5 waves down in an extended third wave, and that probably then will have us, everybody will know then it's over, everybody. And it may not be that long. It may happen as early as this spring or maybe late winter. But let's back up a little bit and get a little bit closer look here. So here's the daily chart, and again, this is our 1, 2. These are very small waves, but watch what happens when the 3 occurs. Now, the reason why I'm doing this video now is I believe the wave 2 is done or very near done right now. And let's see how we have been correct before, and if we're correct again, what that means. Since this high happened in the summer, we've been correct with pretty much calling everything. We said we would come down and form a wave 1, which would form in 5 waves of its own, which it did. What we weren't sure here was wave 1 done here, or were we going to come back down one more time and, you know, was this a wave 3 ending or was it a wave 5? It ended up, the wave ended here, and then after this we should have what's called an ABC retracement number 2, and I came on and did a video when we were in this area right in here stating that the rally was coming. In fact, there was some big CEO on ESPN, ESPN, sorry about that, on CNBC, which came on and said that we were going to have a big rally. Now he thinks it's going to last all the way into the end of the year, and I agreed with him that we were going to have a big rally, but it's not going to last that long. In fact, it's probably over this week if it isn't over already. We will see. Maybe into next week it could go, but let's take a look at where I think we are. We have an A, a B, and a C. And the only thing here is the C should be 5 waves, and I can count 1, 2. The question is this our 3, 4, and now our 5? It's either that or this is our 3. We'll come back down one more time and then go up one last push for 5, which can either tie or exceed this. The reason why we're very close, and the reason why I know we're close, if we've got this count correct, and that's a big if, but I believe, you know, we've been right now every single call since the summer. So looking at that, we've got a lot of overhead resistance right now, a lot of it, and we're overbought right now, and I don't have that on this chart. I usually show it on some of the other charts. And then the other thing is wave 2 cannot exceed the previous wave highs, which are up here. In the case of the Dow, around 18,300. We hit today, where did we hit today? We closed at 17,918. The high was 17,977. So we're only 300 to 400 points from the all-time high. reached back here, and wave 2s, they can reach all the way back to the all-time high, and we'll see if it doesn't, but it doesn't have to, and in most cases it doesn't. I like the first wave 2s, usually in my book, are around the 78% retracement, and that's right around exactly where it is right now. I can tell just by looking at the chart that that's where it is. So here's what I'm expecting. Again, this is not anything to gamble with or to get into the markets with. It is not advice to trade. If you want to trade, contact your own financial advisor. But I believe the wave 3 is about to start. We will come down with some pretty big sell-offs, just like we had here. Then we'll retrace in its own little wave 2 that comes up. And then the big one, the wave 3, which will exceed this one right here, this 15,400 on the Dow. It's going to be real to everybody then. Then we'll have a wave 4 come up, and then a 5, which will be the ultimate low before we have a few months of a retracement once again in the larger scale wave 2 that'll develop then before the big one, the big wave 3, which will come sometime next year. And we're just going to have to see how the timing is. So I just wanted everybody to know exactly where I think we are at the moment. Let's take a look at 2 more charts before we get to gold and silver and see where we're at there. This is the S&P 500. Just wanted to show you this is a weekly chart that this ran up the exact same way as the other did. The B wave formed as an A, B, C, D, E. Running flat, and that actually exceeded the highs in 2008, which is allowable in that case with a running flat for the wave B. Now we should commence on the wave C. Let's take a look at the daily just really quickly here. As you can see on the daily chart, it looks a whole lot like the Dow chart, and it is at extreme resistance here, and we just don't have much room left before we hit the all-time high. We closed today at 2109, and it looks like we got up. What did we get up to? 2116. It looks like the high is 2135, let's say. So we're 15 points away from the all-time high. Is that right? Yeah, we're getting close. So it's time for the reversal if it's going to reverse. Now, if it exceeds this high, we got to change how this all looks. That means this would be this would be C, D, and then E up to the wave 5. Either way, I don't think that's it. See, here's the one thing that's great about this service. What he does is he puts in, or what they do is they put in what they call intermediate time analytics. They have short-term and intermediate term. The intermediate term are the very important ones. Even though we've had this rally way off of the lows down here, as Bob Pisani would say, this is a good market to get in. Look how much we're off the lows. He loves that phrase. 1870 all the way up to 2120. That's a huge reversal. And I'm sure Bob Pisani is loving life for the next day or two anyway. Maybe his love for the life of the markets ends today. We'll see. So let's take a look at the one exception, the Nasdaq. Now, as I said, and as you will hear with Elliott Wave Market Service, he will point out that often one of the markets will diverge at important tops or bottoms. This is actually a sign that you've reached an important top or bottom. As you can see here, the Nasdaq did not come up in the same fashion as the other markets did. In fact, it came up as a straight out 5 wave retracement up here, correction. 1, 2, 3, 4, and 5 right here. It's kind of hard to squeeze it on, so it's a little bit behind here. The charts he has are actually larger and better than what I've got here. But what happened today was interesting on the charts. In fact, this is yesterday's chart. I've been showing you the charts up to yesterday. Is that right? Actually, this is the weekend charts. So let's see, what is today? Yeah, this was the last trading day. I'm sorry. So let's take a look at the Nasdaq on a daily. And you can see here the difference. The C, the wave E, which is C, and intermediate B, this is all Elliott Wave things. If you're into Elliott wave markings, you understand this. The B wave is complete. As I said, this came up more as an impulse. The last wave did break down into a running flat, A, B, C, D, and E, which is what we'd have to rename all the other ones if they happen to exceed the top here. The intermediate trend here is neutral. I would expect it should be bullish at this point. Again, this is what's beautiful about this service. You would think, all right, we're off to the races. We made a new high. Not with an intermediate trend neutral. If this changed to bullish, yeah, but it hasn't done that. And look, it's come off. Wow, how far did we were down to 3,800, and now we're up to 4,700. 47.35. So we've gone, wow, 1,000 points, and it's only 4,700 points. So we've gone up nearly 20% off the lows. And I told you this would be the sucker rally that everybody would think we're going to get in. Here's another thing that makes me think that this run is about over. Look at this big gap here between this day and the next day. All this. Markets do not like gaps. They don't go long before they try to fill them. So look for a reversal that will fill this gap here. But this one did. I just wanted to point out the Nasdaq did come up differently, and it is the one of the major U.S. indices that is diverging. So everything is looking beautiful so far with all of our calls. Everything's been right on time. And let's switch over now to looking at some other things. Now, normally I don't cover the Treasury bonds in this when I do these updates, but I want to show it this time because this to me is very interesting. This determines things like interest rates on housing, things like that. That's how it mostly affects you. And it also affects your how much interest you get in the bank. Don't you hate even getting $1 interest now, because then you have to report it as income to the IRS. It's crazy. It's nuts. This country's horrible. In any case, Treasury bonds, they ran all the way up here. This is a weekly chart in 2015. And when Treasury bonds are going up like this, the yield is going down, meaning the interest rate is going down. So this is why we had such low interest rates for housing and things like that going into 2015. It's also an indication of trouble. Now, when do we have, I'm sorry, this is a daily, so I can't show you. Actually, let me go back and show it. It's important. Okay, so what we have here is we're actually working on a Wave 3 extension for Treasury bonds. In other words, the interest rates that were very low, and most people think that the lowest interest rates we already hit are just done forever. They're not, folks. Oh, you know what this reminds me of something. Maybe somebody will know who this was. Somebody in, I believe, 2011 or 2012, I can't remember, somewhere in there, they were charging like $100 to get for you to buy a CD, a disc, and he was going to tell you what day, the exact day the Treasury market was going to burst, because it's in a bubble. And it was one day that year, but he wouldn't tell you what day it was. And of course, I haven't heard anything from this guy since then, but maybe it's just because I am unsubscribed to him. But there was no way when I was looking at it, because I go by the service, that we were getting ready to have a crash in the treasuries. So in any case, this is indicating we're nowhere near the end of a bubble in treasuries. I do say that treasuries are in a bubble, and that's mostly because the Fed is buying up our own treasuries to start with. It's a crazy game they're playing. Talk about manipulation. It doesn't get more manipulated than this. But guess what? It forms nice, beautiful Elliott waves. Always does. So we bottomed out here in April, looks like, of 2010. And we've been rising up ever since. Somewhere in here, this guy said it was going to burst. Probably here somewhere, and is where he picked the date. And yeah, we burst all the way down here to the 100 level from 107. And right now we're at 123. So some burst, huh? Unbelievable what people will do. $100. So you could get the date and go short Unbelievable. And if you did that, you spent $100, you went short and went broke that way also. Crazy people. This is why you don't listen to me or anybody else for trading. In fact, you have to say use your own financial advisor, but ultimately it's you. If you're putting your money in the market, it's you. Don't blame it on anybody else if you lose money. Don't blame it on anybody else. It's you. I've lost plenty of money. People have followed me and lost money. And I'm sorry for that, but there's been a folk or two that blame me when I constantly say, do not follow me. In fact, as I say, a lot of times people hear what they think they want to hear. Someone absolutely scalded me in a comment last time when I did a video just like this and said, how dare you get people into the markets and try to get them to buy stuff when the whole message is not to buy the market. It's funny. But people do like to believe a lie. They make it up in their own mind and they believe it no matter what. In any case, 1, 2, 3, 4, 5 beautiful waves up for a wave 1. We should come down as an A, B, C and a 2. A, B, C, beautiful. Then 5 waves up for an intermediate. See, this is starting wave 3, the wave 3 up. 1, 2, 3, 4, 5. You see how beautiful that is? Especially on the weekly charts, how some of these Elliott waves are just absolutely beautiful. This is the most manipulated market supposedly there is out there, and you will hardly find better examples of Elliott waves than this. You just won't find it. So, where does that leave us now? 1, 2, 3. All this move, all the way from 70, all the way up to 120. What is that? Did I say 70? Yeah, 70 to 120, so that's 50 points, is that right? Yeah, 50 points. That's nothing to what's coming. Nothing. The wave 2 came down to roughly 95, and we've taken off ever since. However, let you know where we are here. This is a sucker's play too. This is where people are going to say bonds are finally bursting, and they're going to go short. And they're going to be just as suckered out as the people that go long on the stocks. We're dropping down now in a wave. See, we had an intermediate wave 1 and a 3. What's after 1? 2. So it'll come down as an ABC 2. The A wave will form in 5 waves. 1, 2, 3. I'm not sure if we're there yet. Actually, we may have already had A. 1, 2, 3, 4, 5. In any case, it doesn't matter. What we're going to do is we're going to come on down. Probably, it can retrace all the way down to here. We can go all the way back to 95. It looks to me like the best area where it's going to get support is around this 110 area. Maybe as far as low as 100 to 110. Somewhere in here we should stop and reverse. And guess what? Treasuries will take off like a bat out of hell here. And why? Who knows? Usually when treasuries take off like that, there's some severe crisis going on. Is it a monetary crisis? Is it a war? Is it some sort of instability somewhere? All I know is the biggest move in treasuries is about to happen relatively soon in the next year. And we'll probably take a look at this because this is our indicator that will tell us when something bad is going on in the world or about to go on in the world. It's just the way it works. So, because this is still seen, believe it or not, as a flight to safety place. If everything's going to hell in a handbasket, then people start piling the U.S. Treasuries and the U.S. dollar. And the U.S. dollar isn't done going up either. Yes, it's going to go down in its wave 2, but it's going to have its own wave 3 going up. So people that think the dollar is ending, they are correct, but it's not going to end just yet. So, just wanted to cover this here, so let's go on. Well, I was going to show you the gold weekly chart first, but for some reason I'm having problems opening that up. And so I'm going to go to the silver weekly, and gold will cause silver to have its moves. So just translate this chart to gold because they're relatively the same anyway. Silver had its long run up. At wave 1, which also, gold and silver also do very well with forming nice, beautiful Elliott waves, and yet people know that these markets are very manipulated. You're seeing the tail end of a wave 4, an intermediate wave 4 of a major wave 1. This whole thing here was a wave 5 up to our peak in silver at 49, whatever it was, 49.50, whatever an ounce, just under $50. I think some houses actually had $50 on their price. But in any case, since then we've gone from 50 all the way down to we were just $13.85, I believe, is the low that we hit somewhere in August, I believe, July or August, somewhere in there. And the question is, are we done? Now, this long-term bearish trend has just switched to neutral. This is very important because we weren't going to get a sustained rally in the metals with either one of the metals having a long-term bearish trend, and silver held on to that. Gold switched back to neutral quite a while ago, but silver did not. Even though we lost in the last 2 weeks, silver, its internal analytics improved greatly, so that, well, I wouldn't say greatly, but improved enough to take it from bearish to intermediate term neutral. So this is an update I'm giving you. It's neutral now. When it switches to bullish, you'll know the bull run is on, although the bull run will usually start just before it. So let's look at silver now on a daily chart. All right, a lot of markups here on the chart. In any case, he predicted perfectly with the circle and with the ending diagonal here, this little triangle, when it was going to break, and it sure enough it broke here, broke down, came back and tested, and it fell all the way down to its low, which actually looks like it happened first week in September. Since then, we've slowly grinded a little bit higher, but not much. 1385, where it, sitting above 15, but barely. We made it up to 1625. $17 is overhead resistance. Once we push through 17, I think you'll know the bull is back. But let's go to gold and show that more because it's a little bit easier. The daily chart of silver is a little bit messier than gold. So let's go back to gold on a daily. So that's why I think silver is going to be $742 an ounce by now. Oh, just kidding. Just kidding, guys. You've heard the outlandish predictions, haven't you? Sorry. Anyway, here's gold on a daily chart. It looks like gold bottomed out late July, early August at around 1070 an ounce. And we went all the way up to overhead resistance. That's what these red lines are. These red lines never change on the charts, guys. 20 years from now, 1190 will still be on the chart as a support resistance area. Gold will be much higher than that, but it'll still be on the chart. So where are we now? I believe we are in the wave 2 process on its way up. We are intermediate neutral, which, by the way, when we were here, where were we actually? Right here, we turned, see this red dash line? This is where it turned bearish. So it stayed bearish all the way through until right here. Well, actually, where's the neutral? The neutral turn happened here near the bottom. And we've stayed neutral even though we've gone all the way back down here. This, to me, is a good indication that we are in a wave 2, which is a retracement, a very sharp, succinct retracement. So I believe this is a 1, 2, 3. The fifth wave, in this case, is going to be the longest. 4, 5, up to 1. And then an A, B, C, down to 2. So soon, gold and silver should blast up again. Where are we going to head in this B? I don't know, but I can tell you this, me personally, I will be getting rid of most of my gold and most of my silver when I think this wave 2, this B retracement is complete. I don't know where it's going to be, but I believe gold will be somewhere between 1600 and 1900. Somewhere in there is where I think gold will be. I will be getting rid of most of it at that point. Why? Well, because the next Elliott wave, that will be completing the B. A, B, C is what we get on the retracement. Let me go back to silver on the weekly chart and show you, since I can't show you on gold. Hey, I got the gold to work. All right, here's our wave one up here at $1,900 an ounce. Since then, we've been working down. We're going to come down as an A, B, C. A is likely complete back here at this low we discussed already. And at 1070, roughly, that was the low. It may not be complete. There may be one more push down and we get another lower low. We don't know yet until that intermediate trend turns either, well, it will turn bearish when it's bottoming. But if it turns bullish, then we know for sure we've bottomed. We don't know that yet. That's what's great about this service. It combines Elliott waves with analytics that they use, which are fantastic. And the two combined, I can't find anywhere on the planet that is better. I just can't. In any case, A, B, C. Our wave two. There's our big wave one. It took 12 years, guys. 12 years for gold to run from $250 an ounce to $1,900 in a wave one. Remember, almost all the time, the wave three is the longest and most powerful wave. We've only had wave one. And then everybody is all upset because the bull run isn't continuing. It never does. These wave twos inevitably come. They are healthy. They are needed. In any case, wave two, you can see the timeline we're talking about here. 12 years to get to wave one. And if I was looking at this seriously, I didn't even know about Elliott wave market. I was just starting to come into it in this area here. But see, I didn't know it long enough to trust it. I trust it now. But this, we're talking about 2011, 2012. And here we are, 2015, getting ready to turn into 2016. And we're not sure if wave A of wave two is done yet. So 4 years have gone by, and we're just now completing wave A. Wave B will probably be a 3 or 4 year process. So we're probably talking 2017, 2018, roughly, somewhere in there. We're probably going to be in this area up here. 1550, that looks like a lame retracement to me, but that possibly could be. We're just going to have to take a look at it when we get there. This looks better, 1800. It just does, as a nice resistance point, or somewhere in between there. I think 1750 really stood out to me for some reason when I was doing some analysis before. But we'll take a look at that. I'll take a look at that. Again, me personally, this is not for you. I will sell most of my metals at this point. I will never sell all of them because I'm always going to want to have some insurance. And that's how I look at gold and silver. I do not look at them as making money. They are insurance. They hold their value. So in the next 3 or 4 years, this wave B will complete. I will get out of most of it. And then guess what's going to happen, guys? Then we're going to have the wave C, which will probably take another 3 or 4 years to complete. 2021, let's call it. Give or take a year. We're going to be down probably 700, 750 on gold. Just a guess, somewhere in here. That'll be my guess. I have to go back and actually look at it. Actually, I looked at this area before. 850 to 900, that looks really good as a bottom on the wave 2. Wherever that is, that's when I will buy back in. And then I'll ride the wave 3 up. That's why. I'm not going to wait all that time period in between with my money tied up. Just not going to do it. I could spend half of my money, buy it back in at half the price, and still have the same amount, correct? So that's the update for now. The thing is, the major news here is I really believe that the markets are about ready to tank. It's not the big tank, but this will be the realization that was the sucker rally, the one we just are in right now, and that it's over, and then it's time to have some reality hit the American people who really did believe in stuff like green shoots and a real recovery. So I'll end this video here. Take care, everyone. We'll talk soon. Bye.